Hello and welcome to this week's episode for the stock market update from Conservative ETF Investor. I am your host, Ken, and here we are on the Conservative ETF Investor website. And you can see the website address is right up here. And I'll have a link for that. When you go over to YouTube, I will have a link for it right underneath our name right here. So you can just click on the link and go right to our website. Please bookmark it for future use so you can get to our website easily. And as well as on the Conservative ETF Investor, please go ahead and subscribe to our station so that you can get our videos when they come out each week. Okay, going back to our home page. On the home page of Conservative ETF Investor, what we have is we'll have a link to this week's video. I'll place it right here so you can just click on it right there in order to view the video. We have our donate button right here. We have, as you scroll down on the home page, our current ETF recommendations. And here are our current recommendations for the week of April 14th, 2017. This is an Excel spreadsheet, and let's go through the spreadsheet so that you know everything that it is that we're looking at. In this column right here is going to be the indexes that we follow, okay? We follow 5 markets based over 7 ETFs. These are the 7 ETFs, which are, in case you don't know what an ETF is, an ETF is an electronically traded fund, pretty much just like a mutual fund, except it has lower fees and also trades like a stock, whereas a mutual fund only trades at the end of the day. The markets that we follow are the S&P 500, the NASDAQ 100, which is technology. By the way, the symbol for the S&P 500 is QQQ, which is right there. There's the NASDAQ 100, and the symbol for that is QQQ. The Russell 2000, which is the small cap stocks or small capitalization stocks, the ETF symbol is IWM. We also follow the All World X except for the United States, so it's all world stocks outside of the United States. The stock symbol for that is VEU. 20-year Treasury bonds, so there's our bond portion, and the stock symbol is ETF. By the way, when I say stock symbol or ETF symbol, I pretty much mean the same thing. Even though these are not stocks, these are ETFs. So these are all funds and not stocks. Our real estate, which is a REIT, which is a real estate investment trust, stock symbol VNQ. And we have precious metals for gold, and the stock symbol is GLD. Our recommendation for all of these is a hold. The transaction date, you can see the various transaction dates for each of the 7 ETFs that we follow is in this column right here. Now, using SPY as our example, or the S&P 500, the price on the transaction date was $210.98 on November 11th, 2016. That was when it was a buy recommendation. The current closing price at the close of 4/14/17 is $232.51 for a profit or loss of $21.53 per share. On a percentage basis, that equals 10.2%. We are up in our position. The last ex-dividend date for the ETF SPY was on 3/17/2017 for an amount of $1.03 with a dividend percentage of 0.44% on that date, closing price of that date. The total of the previous dividends is 0.59%, so the total percentage return, which includes the ETF appreciation of 10.2% plus the total of all the dividends, which is to date, which is 1.03%, equals a total percentage return for the ETF SPY, the S&P 500, of 11.23%. That's how much we're up in that position. And these are all of our positions, and you can take your time and digest. The most important part of this spreadsheet is our current posture to know if we've made any changes. Currently, we are on hold recommendations on everything across the board. So you can see that we've got holds there. And this is all on the home page. I do have a separate page here, which is just current recommendations, but it's the exact same spreadsheet that I just showed you on the home page. It's just brought in this tab right here if you want to see it in there. On our About tab, this is all about us. Please take your time, read about our philosophy, our strategies, what we believe in, and so forth. Take your time and go through that on the About page. Portfolio ideas. We have our recommended portfolio of the 7 ETFs that we follow with our percentage allocation for each one of the symbols. And if you want to, you can adjust accordingly. Please take your time and read this page here on portfolio ideas to get your idea of what you want. We also have a disclaimer. Please take your time to read our disclaimer. And we also have a contact, which if you would like to contact me, you can go ahead and send me an email message right there and just click send. Okay, so that is our website. Now we are going to go through our current recommendations. We're going to look at our charts of why we have these recommendations for these 7 ETFs. We're going to start with the S&P 500. Now, as you can see here, we use stockcharts.com, which I am a member of, for my stock charting service. Now, this is a weekly chart. You see the word weekly right there. You always want to know what time frame your chart is looking in. And I like to use the exponential moving averages of 17 and 43 to get an idea of what is happening with the ETF that I'm following. So this here is the S&P 500. You can see it up here at the top. Symbol is SPY. It's the SPDR's S&P 500 ETF, which pretty much just tracks, it's traded on the New York Stock Exchange, and this pretty much just tracks the S&P 500. But unlike the S&P 500, you can actually buy and sell this. And this is the price is currently $232.51. You can also see it over here in the thumbnail, the closing price. Also, there's other ways that you can do it. If you put the cursor over here and you look on that rectangular box that pulls up and you go under the letter C, which is about halfway down, you'll see $232.51 is the closing price. By the way, as long as this rectangular box is open right there, let me just go through it. The top one is the date of what's happening there on that particular thumbnail. I guess it's the beginning of the week date, so it's not 100% accurate. You have to go over to a daily chart. If you look at the SPY on a daily chart, which we have right here. Okay, there's the last trading day, which was April 13th, 2017. We opened at $233.64. The high of the day was $234.49. And the low of the day was $232.51. We closed at $232.51. It tells you the volume of the shares, which is 92 million. And also what we are on the y-axis. This here we look at candlestick charts just to make it a little bit easier. When you're looking at the candlestick chart, you can see here how there's a body of the chart. The bottom of this chart on this particular one, because it's a red candle, I know that it opened here at the top of the body. The stock went up and then closed down. So just to give you an idea of what's happening there. But let's go back to our weekly chart. Okay, now we base our decisions here on conservative ETF investor based upon, the weekly charts. And we like to use the slow stochastic indicator, this indicator here at the bottom, as well as the moving average convergence divergence indicator, the MACD, with standard default settings. Now, these lines, these vertical lines that you see here, are buy recommendations. Now, you can see that during this whole time here, this is a 5-year chart, by the way, you can see your years right here, 2013, 2014, 2015, 2016, 2017. So that tells you your years that we're in. These vertical lines are buy recommendations. You could have bought into any one of those and had pretty decent entry positions. Now, I like to buy when the slow stochastic has bottomed and is coming back up. So you see that we have our buys at the bottom of our slow stochastic. Right now, the slow stochastic is at the top, way above 80, and now traveling down. So there's some concern there. Also, the MACD, which this is a much higher concern for us, you can see that the MACD was trading at a top of about 6.5, and it is now topped. You can see it here in the thumbnail. If you look over here in the thumbnail, you can see that it has topped, came down, and now it is below its indicator line, which is the red line right there. It is now negative of the indicator line. You can also see the actual numeric value right over here. You'll see that the MACD is 5.39 and the indicator is 5.73, which is a higher number. So we are now below, and you can see it here in the thumbnail. So we've topped, we've come down. That is an area of concern right there. Also, the fact that we went up to 6.5 approximately on the MACD. If you'll notice the horizontal line, when I put my cursor right there at that apex and you look across the last 5 years, all across here, you'll see that nothing else touched. In the last 5 years, the MACD never got that high, telling you that you're in a really oversold condition. And that MACD, because it's an oscillator, has to go up and it has to come down. Well, because it went up so high and it has to come down, it can come down in 3 ways. It can come down by the ETF or the stock coming down in price, by the ETF or the stock moving sideways, like this right here. You'll see this portion between here and here, how it kind of came down, but when it really came down in price, that's when this came down, the MACD really dropped, telling you that this was your warning sign here. You're moving sideways. You haven't quite broken down, but right here on this bar here where it broke down, that is the one that was telling you it was time to get out. From when it broke that red moving average, exponential moving average, the 43-week moving average, if I hold my cursor, when I click and I hold it down, you can see if you follow this over here to the left, see this right here? It tells you how much you dropped. We dropped approximately 6% on a closing basis. On an intraday basis, we went all the way down to 10.85% from when it broke below this 43 week. If we come from all the way from the high to all the way down to the intraday low, it was a 14.4% correction on this one. Then it came back up, and if you go from the peak to the trough, that's another 14% correction. Then we finally came through and broke out and went, and now we've been holding. Okay, so this is telling you that risk is absolutely elevated. The ETF has not broken down. What I see is I see a rising wedge, which technically is actually a bearish symbol. The expectation is that at some point it would come down, hit the bottom of this rising wedge, which is about 2.43% from where we currently are at, and then break down and go from there. And then finding support potentially here, or I see some really strong support potentially right there at 205. So I have some support at 216. Right now we're at 232. So if I go 232 down to 216, we have a 7% correction from where we are currently are at. That is a speculative guess. Does that mean the market is going to do that? Absolutely not. The market will do whatever it wants to do whenever it wants to do it. I'm just looking at my indicators, and my indicators are telling me that risk is elevated for the S&P 500 at this juncture. But as a long-term investor, I'm still on a hold because that's just me telling you my speculation on what I speculatively guess the future will bring. The market, the ETF has not broken down. It's still in this rising trend channel, and it's been in this rising trend channel for a long time, and it could continue. And for all I know, it could even break out and go up from here. There's no guarantee that it will absolutely drop. There's just an expectation. But until the ETF proves otherwise, we give it the benefit of the doubt and that it is going to be bullish. 70% of the time, stocks go up. 30% of the time, stocks come down. We want to try to avoid the down, but right now it has not broken down, and normal blips in the road are just that, just normal corrections. This last normal correction that we had came down 4.22%. Right now, we're down 2.23% on approximately from a closing basis. Right there, 2.23. If you want to go from a very high to a closing basis, 3.03%. So we're about 3% off from the highs. It's nothing. So we're just going to sit tight. So that's why ETF symbol SPY on our current recommendations is a hold. Let's go through the next symbol in the list. Next is QQQ. Look how strong that ETF is. But again, risk is elevated. We came up on the MACD to above 4. We are now topped, heading down. We haven't crossed below our signal line yet, but risk is definitely elevated. This is also a rising wedge, but it's hugging that upper section, which is a resistance line. This is a support line. This is a resistance line. It's hugging the top of that. By the way, getting back to the S&P 500 weekly chart. As I said, in the conservative ETF investor, as a buy and hold investor, I am on a technical hold. But you, as an individual, if you wanted to take the S&P 500, realizing that risk is elevated, you can absolutely take some of your position off the table if you wanted to, and put put it into cash. Let's just hypothetically say that you have $50,000 in the S&P 500, or let's just say, whatever your allocation is. If you have, well, here, let's actually look at what my allocation is. If I go to Portfolio Ideas and I go over to what my recommendation is, I have a 20% allocation for the S&P 500. Well, if you want to, you could take your 20% position and reduce it by 10%, selling off 50% of your shares and just putting it in cash and tucking away that nice profit. If you had bought on our recommended date of $210, well, that would tell you that on our current recommendations, you would have a total return of 11.23%. You could bank that 11.23% away, or at least half of it, and that way, just in case this is going to come down and correct, you can rebuy it again at a little bit lower price, still maintaining half of your position in there. That is somewhat speculative though, but that isn't, it's your money. You can decide what you want to do. I'm just telling you what the charts are showing me, and you can act accordingly depending upon what type of a investor / trader you may be. Okay, so that is the S&P 500. Let's go back and look at what we're at next is QQQ, which is the NASDAQ 100, which is right here. Again, very strong, but we have reached the top and we've topped. Here you can see it in the thumbnail, and we are now heading down. Risk is definitely elevated. Slow stochastics, same thing. You can see that the black is below the red in the thumbnail, and we are above 80 and traveling south. So we could very easily come down and touch the bottom of this trend line, and from our current posture, that would be approximately 9.81% and still be in a rising trend. So you can come down 9% approximately and still be in a rising trend, and still the overall momentum is still up. Again, same thing as the S&P 500. If you wanted to take a portion of your position off, again, let's go over here and look at my portfolio ideas. And for the S&P 5, excuse me, for the NASDAQ 100, I have a 10% allocation right there. If you wanted to reduce that by 5%, by 50%, reducing your allocation from 10 to 5, take some chips off the table, you can absolutely do that, locking in your gain. How much of a gain was that? Go back over here to the home page, scroll down. Actually, we can just look at it here on current recommendations and scroll to the NASDAQ 100. We have a total gain of 33.15%. Oh, excuse my dog. All right, let's continue moving on. Our next position that we want to look at is the Russell 2000, which is IWM. So let's go ahead and look at IWM. Our weekly chart for IWM is telling us that we are in a rising trend channel. We came all the way up on the MACD to about 5.2, and we are heading south. Also, the slow stochastic is traveling down. We've been traveling sideways now, for about 19 weeks. This is on the weekly chart. You can see the weekly chart right there. But we're still in that rising trend. And it can absolutely tap off of the bottom of this and bounce and go up, or it can continue to go sideways for a while and then go up. And this is what is happening here. But our risk, even though you can see that the slow stochastic has traveled all the way down, it's currently at 39.4. You can see that right there, and you can also see it right there in the thumbnail. So even though the slow stochastic has come down so far, the ETF really hasn't, I mean, from a closing high to its current price, it's down 3.61%, which is very, very bullish. This ETF has not broken down. For it to break down, it's going to have to get below this support line right here. And below that support line, we have this support line right there, which is about 6.52% away from where we are currently at. And then it could bounce, which would be, by the way, if that did happen, that would be very healthy. You could bounce and then continue and go up as long as it doesn't, as long as this support holds and doesn't break down again. You want to try to avoid long breakdowns, but you can still see that the 17 week is clearly above the other one, which is the 43 week EMA. And so we are still very, very healthy in this ETF. So that's the IWM, which is the Russell 2000 ETF. We're going to move on to our next one, which is the weekly chart for VEU. And you can see here, hold on, let me just correct that. This is the VEU is the Vanguard All World ex-USA, traded on the NYSE, which is the New York Stock Exchange. You have a rising wedge is what you have. And this is a declining tops trend line. You can see that right there. Let me take off the inspect. This is a declining tops trend line. We came up, we didn't quite hit that trend line, but we are now coming down. You can see here in the thumbnail how that over the last 4 weeks is coming down. You can see here that you've topped your MACD in the thumbnail, and it's still above the signal line, but at this current rate it's going to come down and correct. Also, your slow stochastics, you can see that in both the chart and in the thumbnail. That is below the signal line and traveling down. We are still on a buy recommendation because this has not broken down, but I can see that risk is elevated. And if you wanted to take some of your position off, it would not be a bad thing to do. But for our purposes here, we're still giving it a hold recommendation. Let's move on to the next ETF. The next ETF is Treasuries, by the way. I try to do everything in order, so I'm going from the S&P 500, the NASDAQ 100, Russell 2000, All World ex-United States. Now we're on Treasuries, then we'll do REIT, Real Estate Investment Trust, which is real estate, VNQ, and then we'll do gold. So right now we are on TLT. All right, TLT is 20-year Treasury bonds. We are in bonds. What is bonds trying to tell us? You'll see here that the MACD completely corrected down, bottomed, and then came back up. The same with the slow stochastics, giving us a buy symbol on December 27th, 2016 at $117.19. Currently trading at 123.47. Since our buy recommendation, you can see that we moved sideways up until just recently. We have now broken out. There was a downward trend channel that was a declining tops trend line that was showing itself right there, and we've broken past that. And now you can see that we are going positive. The MACD is below the zero line, and it is traveling up. It's above its signal line. Same thing with the slow stochastics. We are now traveling up. So this is looking healthy. It's looking strong. Now, you see right there? That's a declining tops line. Once this ETF hits that declining tops line somewhere around here, that it will need to break free of that in order for it to continue its trend. So it's definitely going to have a little bit of a struggle right about there. Let me just throw on my indicator to see what the ETF is also doing when it gets there. See right here, there's a little bit of a top resistance where it came down, and that is right around where it's going to intersect this line depending upon when this takes place. Could take place even a little bit further down where we have this top right there. So there could be a little bit of a struggle that it's going to have to overcome, but the momentum is clearly on its side. The MACD is in a nice posture position, getting it here below zero and coming up. So we are still on a hold recommendation for the 20-year Treasuries TLT. Let's go to the next one, and that is VNQ. VNQ this is a weekly chart for the Vanguard Real Estate Investment Trust ETF. It's traded on the New York Stock Exchange, symbol VNQ. Currently trading at $84.27, and you can also see it right over here in the thumbnail, $84.27. What is this ETF trying to tell us? Well, this ETF looks like an asymmetrical triangle where it came down, came up, and now it looks like it's wanting to break free right there. Still, it's right at the very edge of that top line right there, of that resistance line. If we can get above that resistance line, that'll be very bullish. Now, I'll take you over to the thumbnail. Do you notice how the MACD topped, came down to correct, touched the signal line, but never went through it, bounced off of it, and came up? And it is all happening above the zero line. This is all bullish. This is very, very bullish. Plus, the slow stochastics is above the signal line. Very bullish. The momentum is on the side of this ETF. So it's poised to come up and at least come up to this signal line, which is approximately 5%, 5.3% away from where we are currently at. It's about 6% actually. So we should be able to get that another 6% out of this position. So we are sitting on a hold recommendation for this ETF. Our buy, let me just take off the inspect, and our buy recommendation was on November 11th, 2016, right around here. And that is for real estate. Let's go to our next ETF. Our next ETF and last one for today is gold. What is gold trying to tell us? Oh boy, look at this one. Okay, we had a buy recommendation on gold on December 30th, right at the end of the year. So you started off your new year in a gold position. Look at that MACD in the signal in the thumbnail. You can see how positive that's looking. Slow stochastics, we went through a little bit of a bounce right there, but it's positive and it's up. But look at the risk that you're under here. Now this is a 5-year chart. Let me go ahead and take you, oh, I'm sorry, this is a 6-year chart. I'm going to take you over to an 8-year chart and update this. Okay, now you can see a little bit better what's happening here. You see these tops? You can see this declining trend tops line, which is a resistance line, which had 1, 2, a whole bunch of touches in there, plus look where it is at right now. It is exactly on that resistance line, which is a long resistance line. It's been in place. Well, this line was established just before 2013. So it's been in place for a long time. And a lot of investors are watching that line. If the ETF can get above that line, then it's going to be in a very good position for it to continue on. It is looking really well to move on. So that is what is happening with this gold position. So our current recommendation is a hold recommendation for gold. All of our positions are actually on hold. But considering where gold is at, let's see how much money we've made in gold so far. So far we have a total of 11.85% in our position. That's not a bad return, 11.85%. Would not be a bad idea to take half your chips off the table, put yourself in cash, and see if it can break above this trend line and hold it for a week or longer, and then re-enter it again, because if it continues on this downward sloping trend channel, and if that resistance line holds, it's going to come down. But that's just a speculation. It is poised for it to go up. So that's why, for our purposes, I have to keep it at a hold recommendation. So I'm a hold recommendation on everything. So pretty much that is our market update for this week. I hope that you have enjoyed the stocks and the positions. Please visit us on Conservative ETF Investor. I'll put